What is going on, traders? My name is Jack from JR Options, and it is currently Sunday, January 10th, and we have a big trading week coming up. I'm going to be going over my top 5 trades for this upcoming week, looking at my setups and what plays I am going to be potentially taking. Okay, so let's get right into it. The 3 main things that I'm going to be looking for is technical analysis. So I'm going to be looking at different price action levels, volume, a lot of different indicators, such as the RSI. And then I'm going to be looking at the option chain, seeing what kind of premiums there are going to be, looking at implied volatility, some of the Greeks. And then I'm going to be showing the potential plays that I'm going to be taking. So to start it off, we are going to be looking at Amazon. Okay, so Amazon has definitely been an interesting one for the past many months, going all the way back to August. So going back to August, we've been in this massive bull pennant. So basically what a bull pennant is when we start with a wide range and we make lower highs and higher lows, and we continue to do that, bouncing within that range until we sort of get to this ending. And that's sort of where we are right now. So we can look at this 2 ways, and I'm going to remove that for later. So we can look at this 2 ways. One is you can either see this trend line right here, and that is going to be going from the bottom of September 21st, and we're going to be getting that wick from November 3rd, and that'll bring us right to here where we currently are. So we bounced off that trend line on Friday, which was the 3140, and we had a pretty good bounce all the way back up to 3180 where we closed. Now, one thing I'm noticing if we zoom in here is that we're right below the 100 exponential moving average. So that could definitely be a bearish indicator considering we have this doji right here. And basically what that means is there's indecisiveness between the buyers and sellers. So we could definitely see a little bit of selling off back to retest the trend line at 3146. Personally, I'm leaning more bullish as there's a lot of bullish sentiment on Amazon, although we could definitely see that one more leg down before we really break out. So if we do get that other leg down, we could retest this bottom trend line where we include the wick from November 2nd, and that would bring us all the way down to 3073. Now, that is a little bit of a big sell-off, roughly 110 points, but that could be definitely a very good buying opportunity. So that's the bear case for Amazon. So let's take a look at the bull case. So with the bull case, we would definitely need to break this 100 EMA. So let's take a look at the Fibonacci retracements. And so the way I do that is we go from the highs all the way down to the low of this pennant, and that'll give us these different lines. So this is the Fibonacci retracements. So these are going to give us the 23.6, 38.2, 61, 50, 61.8, 78.6, and 100% retracements. So if we take a look here, we can see that the 38.2 3 retracement is this 3132 level that we bounced off of on January 6th. So we can tell that the 38.23 retracement is going to be a very big one where the bulls are definitely holding it, and we could see a lot of movement there. Now, if we break above this 50% retracement, that would bring us to the 61.8 at roughly 3290. And if we go even closer on the 20-day to 1 hour, where we go from the highs at 3350 down to the lows at 3130, that 61.8 is going to be around 3265. Now that is going to be a huge area of resistance where if we break that 3265 level, we can definitely go back to 3350 and way higher. So if we do break that, that would bring us to 32,350, which is the top of this trend line. So if we break the top of the trend line, we are going to skyrocket up to 3485 and eventually all-time highs and above. So above all-time highs, we have 3703, and 4,000 as my eventual target. Now, this is going to be a very long-term play as Amazon has been consolidating for a while. So looking at the RSI, we are in this 47.5 range, and that's sort of neutral for Amazon. It's not overbought, it's not oversold. So it's definitely in an area where we need to see some more bullish momentum, some increase in volume on the daily. If we take a look at that, we're kind of cooling off from the last pump. And when I see decreasing volume on a little bit of a sell-off, that's pretty bullish to me, as it means that there's less sellers as we are selling. So definitely let's look for some bullish volume. And now looking at the implied volatility at around 0.4, and if we look into the option chain, that is also going to be around 0.4. So that means that volatility is pretty low for what we can see with Amazon. I've seen Amazon all the way in the 80, 100% range, and that's going to bring the contracts a lot higher in premium. So as we know, an increase in implied volatility is very bullish for our contracts. So let's take a look at the February 19th. That is going to be sitting around 160. So it's definitely a very expensive play, costing around $16,000. Now, looking a little bit more short term for this Friday and next Friday, it's going to be sitting around $7,000 and $5,000. Now, what I'm going to be playing is spreads. So if you guys haven't seen it already, I posted a video on credit and debit spreads. That'll be up over there in the top right corner of this video. So definitely check that out. Learn about spreads. It's a great way to be playing these expensive tickers. And I'm going to be looking for probably around the 3250 area, because if we look at our charts, that would be around the 61.8 Fibonacci. And I think we are going to hit that area within the next 2 weeks. So looking at the January 22nd, I'm going to be looking at a 3250 bull debit spread. So where we're going to buy the 3245 and sell the 3250. Now that would cost us roughly 1.7 in premium. So that would be our max loss of 1.7 and max profit of 3.3. Now I go a lot more over debit spreads in my debit spread video. Make sure to go check that out. Link in the description. And that could definitely be a very good play. 200% roughly return on investment. On the credit spread side, I would look for probably at this support zone of 3130. So if we go to 3130, 3125, that'll give us roughly 1.77 in credit, meaning we're going to have roughly a 50% ROI. Okay, so going to my next stock on this list, Tesla. Everyone loves Elon Musk. He is the messiah. And Tesla seems to only go up. We've had a lot of breakouts recently this year, going from 70 all the way to 884. So let's really dive into what's going on with Tesla. First thing I really noticed is the relative strength index, meaning the RSI. Now, I highlighted over here when the RSI gets to this 85, 86 area. Now, as we can see, whenever it does touch it, it tends to go down quite a steep amount. We went in July from 350 all the way down to 270. Going back to September, we went from 506 all the way down to 333. So definitely very big reductions in price. And last time RSI was oversold, always constant pullbacks. So what really happened here was we had this rising wedge or channel, depending on how you want to look at it, and we broke above that. Now, this brought over this past coming week a lot of gaps to be filled. Now, looking here, we have this 100% extension, and that's going to be around this 811 to 815 area. And we also have this pretty big gap right here from 839 to 820. So when we have continuations, we always want to look for gap fills, as it is going to be basically like cooling off the stock. You can't run forever. You always have to come back down a little bit. So once we do hit this 820 area, that's where I'm going to start looking for a long position. We did get rejected right at this 161.8 Fibonacci. At 884.49. So definitely a textbook rejection. Volume is definitely sky high. what we can see on this next sell-off that I believe is to come is a little bit lower volume. We definitely need to cool off this RSI back below the overbought areas. So I'm expecting it to come back around this 60 to 70 level. So once it gets there, definitely look to go long. And I'm expecting it to go way past all-time highs, all the way back to the 1,000 level. Now, pre-split, that would be $5,000. Can you believe that? Tesla going from basically $200 in the beginning of the year, or $300, all the way up to $5,000. That is absolutely insane. Okay, so some potential plays I'm looking for this upcoming week. We can play some puts. Implied volatility is sky high, over 100%. So if we are going to play this, I'm looking for actually a put debit spread where we buy a put and sell a farther out put. That would cost us roughly $120 in premium because it is 1.23. And the risk reward here is pretty great. Spending $120 to make $380, that could be basically a 300% gain. And if the bulls on Tesla do end up breaking this 161.8, we can look to cut that and re-enter long for a test of this 1,000 level. Okay, going on to the third one on our list, we have Shopify. Now, Shopify has been an interesting one. I've been watching it for a while. And the first thing I notice here is, let's scroll into the 180-day 4-hour, is we had a little bit of a head and shoulders action. So here you can see the left shoulder, head, and then right shoulder, and that brought us down to the 200 exponential moving average. Now, as we know with the 200 exponential moving average, it's a very bullish indicator when we bounce off of that, as there's a lot of buyers that are there. Now, as you can see here, that looks like a few weeks ago on this Wednesday, we basically retested it, bounced, went a lot higher, came back down to the 200 EMA, and we bounced off of it. And it looks like we broke this descending channel. Now, once we break a channel, that is generally bullish. As you can see, a lot of movement back to the top of the channel. So what I'm expecting for Shopify is if we can break this 61.8 Fibonacci, which is very hard for the bulls to break, but if we do break it with some volume, I'm really expecting a test of 1,240 and all-time highs at 1285. So let's take a look at RSI. It's sitting at 63.8 on the 4-hour. Let's look at the daily. So the daily is sitting around 57. So that's kind of neutral for where Shopify is. I am expecting it to go back to the overbought area. And if it does, definitely watch for an all-time high test and above. So implied volatility has been increasing from a neutral area of 0.54 to 0.6, meaning that the contracts have already started increasing in value. But I believe that there is definitely a lot more to come. Potential plays is, if you want to be a little bit safer, you can play a credit spread. So for this week, I already have an open position at the 1135 to 1130, and that would net me roughly $165 of profit for $335 of loss. So that would be a 50% risk return on investment, which is what I personally like to see with credit spreads. Now, on the debit spread side, if you want to play a little bit more risk and look for this 1240 test, we can play, I would look for 2 weeks out, as you don't really know what can happen in the upcoming days. So let's increase the amount of strikes we have here to 50. And let's go 1240 to 1245. Okay, so that would cost us $125 of premium. Now, if we look at that, that would cost us $125 with a max profit of $375. Now, that would also be 300% profit, which is absolutely amazing. Not many people on Wall Street Bets actually get that 300% without blowing out their account. So that could be definitely a great risk to reward. That is something that I'm going to be looking at open tomorrow. So let's see what happens pre-market. Look for some action. And if we do see a little bit of a retracement, I'm definitely looking to go long on Shopify. as it could definitely be a great one in the upcoming week or two. Okay, so now the fourth one on my list is going to be Visa. This one's been interesting. We've had a test of all-time highs 3 times, where once we had in September, which led to a pretty big sell-off. And then again, we had it in November, at looks like November 9th, and that led to a sell-off. And once again, we are roughly around this all-time high level. So going back to this November 9th area where we went to a sort of a pennant, we broke out of that pennant, so that's a bullish sign, but we create a few of these gaps. Now, what's happening here is that we're entering a falling wedge. So looking at the 4-hour 180 day, we have broken out of this falling wedge. And if we can actually fully break out of it, let me draw another trend line here. If we include these, it's looking like we would have to break above 216, and if we can break above 216, I want to see a test of 217.66. Now, that was the all-time highs that got tested a few times, and it sold off as we went there. So if we can break 217.50/217.66 with volume, and that's the important key here, that we need to break with volume for confirmation. And if that happens, I'm looking for a new all-time high test of 220.40 and getting some of these Fibonacci extensions. So looking at the 222 to 225 area and potentially above. So my short-term target is going to be 228.67, which is the 100% extension. So looking at the RSI, we're kind of in the middle here at 57.8. So we're kind of running towards that overbought level. We are not even close to there yet. I believe in order to actually get overbought, we're going to have to go above all-time highs, which is definitely possible. One very interesting thing is that implied volatility has been cooling off on Visa. So that would be positive if we are looking to actually enter a trade. So looking at the options chain, looking at these February 9th, it's in the upper 29 to 30 area. So contracts really aren't that expensive. I'm looking at the 220 call for February 19th. And what I would do is enter into a calendar spread, as Visa could consolidate or move slowly to all-time highs. And what a calendar spread is, and I'm going to make a video about this later, so you don't really need to know too much about it, is when you buy a farther out contract and then sell a shorter contract. So in this case, we would buy the 220 call and sell this 220 call for $1 in premium. So that would get some of your premium back. Like I said, I don't really expect you guys to know right away what a calendar spread is. I'll make a video about that later, describing all you guys what you guys need to know about it. So once again, Visa could be a really good play. If we do see a little bit of selling off, I'm looking for this 212 area, which is the bottom of the falling wedge. Looking for a retest of that. That would bring the RSI probably around this 45 level, and I could definitely see it being a great time to actually enter this trade. So put it on your watch list, mark these levels 217.50 and above for potential entries. Okay, moving on to our fifth and final stock. This one has been interesting for a while. We had a big gap up going back to August, went to all-time highs at 284, and then we sort of sold off, created this gap from 238 to 225, and it doesn't look like we have filled that yet. So one thing to notice is that we are at the around the 200 EMA on the daily, which was 215, had a strong bounce off of it with a little bit of volume. And on the RSI, we are at 43.1. So that is more towards the oversold areas, meaning we could definitely see a lot of buyers coming in to bring this stock up. My first target on this would be this 100 exponential moving average, which coincides with the 23.6% Fibonacci retracement. So that would be 231.8. So that's roughly another $10 from now. And above that, we could see targets of this 238 level, the 50% fib, which is at 250, and above all the way to all-time highs. Now, looking at implied volatility at 0.3, that is great to enter long-term contracts, as we're going to be paying a lot less for the to actually enter the trade. So right now, since Salesforce is in some consolidation, I would be looking for some more longer-term contracts. So kind of the February 19th, this 230 contract could be a great one to pick up if we are looking to go all the way to 285, or even, pick up some more time. Go for March 19th. That's going to cost a little bit more, but we're also going to get an earnings throughout that to bring the price hopefully a lot higher. Below this 215 is where I would cut this trade, maybe look for a better entry, find some more support. But overall, Salesforce, great in the long term. So let's see what happens this upcoming week. Let's see if anything changes. And if we can actually find this 100 EMA at 231.80 on the daily. Okay, so let's take a look at the overall market, the S&P. So as we know, the market has been absolutely flying in the past week and ever since March or April. March was not very fun. But let's look at what has been going on since December. So it looks like we have been in this rising wedge where we actually broke above that. And within this past week, after we had a little bit of sell-off on Monday, just been rising steadily up. So what I see is if we go into the 4-hour, we have another rising wedge, and this one's a little bit steeper. Now, what's going on so far within this futures session is we've been sitting around this 3,800 level, and that's kind of where I see some support. If we do break below that, we could retest this 3770, and that would be a great place to go long. That would be roughly 377 on SPY, an ETF that everyone loves to play. So if it does go back to 377, that's where I would load up. I am personally already in some long 2-week out SPY calls, and since we are at the lower part of this trend line, I could see us filling the gap that we created on the daily today. Let's go on the 1-day 5-minute. You can see there is a small gap right here at 322 to 320. And gaps always get, or usually I should say, get filled. So we could see a gap down tomorrow. Watch for it to rise back up. And we would have to break 3805. And that is going to be a little bit of a big area of resistance. And above that, we could see a retest of the top of the trend line at 380. And if we do break above it, I'm looking at the fib extensions of 23.6 and 38.2. And that would bring us anywhere from 386 on SPY to 389. Now, I am expecting once we get there a little bit of a sell-off. We might come back all the way to this 3,800 level, or even test the 100 EMA at 3,750. So like I said, 3,770 to 3,750 is a supply zone. So watch for that. And I'm going to be leaning bullish overall on the market. There's really no reason to be shorting right now, as the momentum is just completely bullish. And it seems that all dips are being bought. Okay, so that is going to be all from me for today. Once again, if you have not seen my previous videos on credit spreads and debit spreads, make sure to check that out, link in the description. And I am also going to be starting a Robinhood challenge, so be on the lookout for that. That should be coming out in the next day or two. And once again, if you like what you saw in the video and want to support the channel, make sure to drop a like on the video, hit that subscribe button with notifications turned on, and I will see you guys in the next video.